Welcome to our exploration through the fascinating world of Bitcoin, a digital currency that has captured the imagination of millions around the globe, but that has also been surrounded by a cloud of misunderstandings and myths. In this video, we will dive into the main myths that have emerged around Bitcoin, unraveling the truth behind the most common misconceptions. Our goal is clear: to provide you with a more accurate and demystified vision of what Bitcoin really is and what it is not. So, if you haven't done so yet, we invite you to subscribe to our channel and activate notifications so you don't miss out on this revealing journey through the world of Bitcoin. Let's get started. Myth number 5. Bitcoin is too volatile to be a safe investment. We often hear that Bitcoin's volatility makes it a risky option for investors. However, it's important to understand that volatility is not necessarily synonymous with risk, especially when considered from a long-term perspective. Since its inception, Bitcoin has experienced significant fluctuations in its value. These swings can be alarming in the short term, but they don't tell the whole story. Over the years, Bitcoin has shown an impressive upward trend, rewarding those investors who have kept their faith in the cryptocurrency despite temporary turbulences. Bitcoin's volatility can be attributed to several factors, including its relative novelty, market speculation, and the evolution of its perception as a store of value and medium of exchange. As the Bitcoin market matures and more investors and companies adopt it, its volatility is likely to decrease. It's crucial for investors to understand the long-term value and potential of Bitcoin. Those who have adopted a long-term view, investing and holding their assets through the ups and downs, have been rewarded with significant returns. Bitcoin has not only outperformed many other asset classes over the past decade, but has also begun to be recognized as digital gold, offering a hedge against inflation and the devaluation of fiat currencies. In conclusion, while Bitcoin's volatility may present short-term challenges, its long-term track record suggests it can be a safe and profitable investment for those who understand its intrinsic value and potential. As with any investment, the key is in research, understanding, and above all, patience. Myth number 4. Bitcoin is a bubble that is about to burst. Throughout history, we have witnessed numerous financial bubbles, from the famous tulip mania of the 17th century to the dot-com bubble in the early 21st century. These bubbles are characterized by a spectacular increase in asset prices, followed by an equally dramatic fall. So, is Bitcoin just another bubble waiting to burst? To answer this question, we first need to understand what makes Bitcoin unique. Unlike traditional bubbles, which are often based on rampant speculation about assets of questionable value, Bitcoin is backed by revolutionary technology. The blockchain. This technology not only offers a secure and decentralized way to conduct transactions, but also has the potential to transform entire sectors, from finance to supply chain. Moreover, the adoption of Bitcoin has been steadily growing. Large financial institutions, companies, and even countries are starting to recognize its value, investing in it, or adopting it as a means of payment. This growth in adoption is an indication that Bitcoin has intrinsic value and is not merely based on speculation. It is true that the price of Bitcoin has experienced significant volatility since its inception. However, this volatility is not necessarily indicative of a bubble. Rather, it can be seen as a characteristic of an emerging asset that is finding its place in the global market. In conclusion, although Bitcoin shares some characteristics with historical financial bubbles, such as price volatility, it differs significantly in fundamental aspects. Its underlying technology and growing adoption suggest that Bitcoin is not a bubble about to burst, but a financial innovation with the potential to change the world. As with any investment, there are always risks involved. But dismissing Bitcoin as a mere bubble would be to ignore its real impact and potential. Myth number 3. Bitcoin is only used for illegal activities. This is one of the most persistent myths about Bitcoin, but the reality is quite different. Although it is true that, in its early days, the cryptocurrency was associated with transactions on the black market, today the situation has changed drastically. First, it is important to highlight that Bitcoin transactions are more transparent than many think. Each transaction is recorded on the blockchain, a public and distributed ledger, which makes it extremely difficult to use Bitcoin for illicit activities without leaving a trace. Moreover, Regulatory and law enforcement agencies have significantly improved their methods for tracking and combating the illegal use of cryptocurrencies. But what is the reality of Bitcoin usage today? Recent studies show that only a minimal fraction of Bitcoin transactions are linked to illegal activities. According to a report by Chainalysis, a leading blockchain analytics firm, in 2020, only 0.34% of all cryptocurrency transactions were associated with illicit activities. This is a significant decrease compared to previous years, demonstrating a shift towards more legitimate uses. Furthermore, Bitcoin and other cryptocurrencies are being adopted by a variety of legitimate sectors. From e-commerce to philanthropy, through investment and asset management, cryptocurrencies are opening up new opportunities. World-renowned companies like Microsoft, PayPal, and Starbucks now allow customers to transact with Bitcoin. This not only demonstrates the viability of Bitcoin as a payment method, but also its acceptance in the mainstream market. In the field of humanitarian aid, Bitcoin has proven to be a valuable tool. It allows organizations to send and receive funds quickly and with minimal fees, even in situations where traditional banking systems are not an option. This has facilitated aid in disaster zones and in countries with unstable financial systems. In summary, although Bitcoin was initially associated with the black market, its use has evolved significantly. Today, the majority of Bitcoin transactions are for legitimate purposes, and its adoption by companies and organizations around the world is proof of its utility and legitimacy. Debunking the myth that Bitcoin is only used for illegal activities is essential to understanding the true value and potential of this cryptocurrency. Myth number 2. Bitcoin has no intrinsic value. This is one of the most common arguments and, at the same time, one of the most misunderstood about Bitcoin. To debunk this myth, it's crucial to understand where Bitcoin's value really comes from. First, let's talk about its underlying technology. The blockchain. Bitcoin's blockchain is a technological innovation that enables transactions to be carried out securely, transparently, and in a decentralized manner. Unlike traditional financial systems, where trust is placed in centralized institutions, the blockchain is based on distributed consensus. This means that each transaction is verified and recorded in a public ledger by a network of thousands of computers around the world. This technology not only makes Bitcoin extremely secure, but also introduces a new paradigm in the management and transfer of value without intermediaries. Secondly, there's digital scarcity. Bitcoin was designed with a maximum supply of 21 million coins, a feature programmed into its code. This scarcity ensures that, unlike fiat currencies that can be printed without limit by governments, Bitcoin maintains value due to its limited supply. This property makes it similar to gold and other scarce assets that have been valued throughout history as stores of value. Last but not least, there's the trust of its user community. Bitcoin's value also derives from the trust and collective consensus of millions of people around the world who use it, accept it, and store it as a form of digital money. The growing adoption of Bitcoin by individuals, businesses, and even some governments reinforces its legitimacy and perceived value. In summary, to say that Bitcoin has no intrinsic value is to overlook the unique properties that make it valuable. Its revolutionary technology, its digital scarcity, and the trust of a global community. These factors combined not only give Bitcoin intrinsic value but also position it as an innovative asset class in the financial world. Myth number 1. Bitcoin consumes too much energy and is bad for the environment. And we arrive at myth number 1 on our list. Bitcoin consumes too much energy and is bad for the environment. This is, without a doubt, one of the most widespread arguments by Bitcoin critics. But is it really as simple as it seems? Let's break it down. First, it's true that Bitcoin mining requires a significant amount of energy. This is due to the nature of the mining process, which involves solving complex mathematical problems to validate transactions and secure the network. However, it's important to put this consumption into perspective compared to the traditional financial system, which includes banks, ATMs, credit card infrastructure, and more. Bitcoin's energy consumption doesn't seem so disproportionate. The global financial system uses a huge amount of energy to keep its daily operations running. From office buildings, lit 24 hours a day, to servers processing millions of transactions. Moreover, It's crucial to highlight the efforts being made within the Bitcoin community to migrate towards more sustainable energy sources. A growing number of Bitcoin miners are adopting renewable energies, such as solar, wind, and hydroelectric, to power their operations. This not only reduces Bitcoin's carbon footprint, but can also make mining more economical in the long run. Another point to consider is the innovation in the energy efficiency of mining equipment. Over time, the technology used to mine Bitcoin has become more efficient, reducing energy consumption per transaction. As this trend continues, we are likely to see a decrease in the environmental impact of Bitcoin mining. In summary, although Bitcoin's energy consumption is a legitimate concern, it's important to look at the full picture. Compared to the traditional financial system, and considering the efforts towards sustainability and energy efficiency, the argument that Bitcoin is inherently bad for the environment loses strength. As in many aspects of our society, the key lies in innovation and in the search for solutions that allow us to move towards a more sustainable future. And with this, we have debunked myth number 1 about Bitcoin. We hope this information has provided you with a new perspective on this highly debated topic. Don't forget to follow us for more myth debunking and in-depth analysis. Until next time. In conclusion, we have debunked the 5 most common myths about Bitcoin, from its supposed lack of intrinsic value to concerns about its security and legality. This journey has reminded us of the importance of seeking reliable information and truly understanding how Bitcoin works before forming an opinion about it. In a world where technology advances by leaps and bounds, staying informed is key to making sound financial decisions. Don't forget to subscribe to our channel for more myth-busting and updates on the fascinating world of Bitcoin and cryptocurrencies. See you next time.